Let's move on now to you, Rebecca, because you've got some concerns about crypto's correlation with the Magnificent Seven. I was asked a couple of weeks ago, what do I think of crypto? And I don't know whether you remember an old song that was by a guy named Edwin Starr. It was War. What is it good for? Well, insert crypto here. Absolutely nothing. Insert crypto here. I don't know what it's good for, other than to be a speculative investment.
Well, as we all know, there's a lot under the umbrella term of crypto, and some of them have very tangible uses, and some are more speculative
NFTs and dollar-backed coins and so forth.
I published a piece in John Ellis's Substack news items earlier this week about our crypto presidency, because I think under all the tariff talk and deregulation talk and Doge, he published an executive order in January saying we are going to be the crypto capital of the world. And we're going to do that with clear regulatory guidelines. We're going to do that with explicit government support. And so I'm not surprised that between the election and January, we had a huge run in crypto, including Bitcoin. The caution I have gets back to something Gene was just talking about, which is the possibility of a correction in Mag 7 and tech generally. At the end of the day, crypto is fintech. It's financial technology, right? That's all it is. And it tends to trade like leveraged small cap fintech. So when technology stocks go up, often, not always, but often crypto goes up. And what I've found is that if you go back a decade, every time the NASDAQ fell more than 5% in a month, Bitcoin fell more often than not, the majority of the time, by 5% on the month or more. Gold, just for context, was up.
So don't go into crypto thinking it is a non-correlated asset to technology shares or to risk assets.
Not yet. That could change in the future. But at least until this point, it has not provided you diversification. It has provided you amazing returns if you bought and hold. If you bought in 2013 and still have it today,
wish I had.
Risk adjusted, even with the volatility, you're better than the S&P 500 or NASDAQ. The problem is that most people haven't bought and hold. There was a great study.
Have most people made or lost money in crypto?
So this is the big point. And you think, well, how do I even answer that question? The Bank for International Settlements, which is sort of the central bank for central banks in Switzerland, did a big global study. And they looked at how many people made and lost money. And what they estimate, and it's an estimate, but it is a good, deep study globally, not just the U.S., between roughly 73 and 81% of people who bought crypto over that decade lost. So
is that because they're trend followers? In other words, they buy when the thing is going up, and then the big money gets out.
That's exactly right.
Depantsed.
So what they also found is that the vast majority of people trading in crypto today, again, this could change, have been young white men, usually under the age of 35, and they tend to trend follow. And so they're buying after Bitcoin goes up, and then the big whales, the huge owners, sell, and they get caught in the wash.